and welcome to Pro Trader Strategies market commentary for the last day of 2020. Can't wait to see 2020 hindsight, right? All right, well, with that being said, it's been a really quiet week. Not a whole lot of going on. It seems that most people have done their sector rotations all well before this week, so it's really kind of slowed down. Not a whole lot of economic data to really drive this market. Today we did get unemployment claims coming in a little bit better than expected at 787,000, expected to be 832,000. Natural gas storages coming in at a drawdown of 114 billion cubic feet, expected to be 127 billion cubic feet. So not really moving that natural gas that was expected, especially with as much snow and cold that we've seen across the United States. Even here in Arizona, it's been a little bit chillier than normal, so I would have expected to see some of those natural gas storages get depleted a little bit more than that. Anyway, so not really a whole lot driving the markets today. It's pretty quiet. Nothing really to talk about to say, hey, this is something that's going to make the markets move today or heading into 2021. All right, but so let's talk about the markets and see how they're doing right now. We've got crude oil slightly in negative territory. I was expecting this to start breaking down for about a month now, and it's not doing that. But I still believe it should be going back down towards the point of control, because I don't think that there's a whole lot of demand for crude oil going on right now. Gold yesterday did make a move outside of our triangle that we kind of drew in here, making that move. So it looks like gold futures could start migrating a bit higher here and test that 1900 handle. We're only a couple dollars away from that, and did go into the 19 handle earlier today, albeit just slightly, as we can pull up this little thing and see that we went in there by about $5 and then started settling back down. Weakening dollar still on the docket there, and that should give a little bit more strength to gold futures as is dollar denominated. Bonds finally starting to make a bit of a move. It's only 6 ticks. It's really not that much of a move, but it is moving higher. Hopefully to see that move a little bit more aggressively so we can see those interest rates come down. We've seen the housing market really start to struggle as there's low inventory, high interest rates, and the people aren't able to pay for that extra high interest rate when they have the higher home. When they were shopping earlier on, probably in this year, those higher home prices didn't affect their decision making as much because of really suppressed interest rates. Now that interest rates are rising up, they might have been looking at a house that they now cannot afford. So those are some of the things that are going on in that housing market. That's another reason why I'd like to see some of these interest rates start to go lower with the bonds moving higher. Now the VIX pretty much unchanged on the day. Dow Jones Industrial Average off by 32 points, but again, that's almost nothing. Very inside day again today. Setting above that 9-day simple moving average, still showing short-term bullishness going on there. NASDAQ, we haven't really created a topping pattern. That double top there, maybe a confirmation today going below the 9-day simple moving average would make us look to see this move back down into this trend channel that we have set up here. But as of this point, it's really hard to read the tea leaves on this one right now. Looks to me like it's a little bit toppy, but I don't think that it's going to be a major correction. Maybe just back down, test the trend channel that we have there, and then start resuming next year to the upside. As people start to get their stimulus checks and that spending starts hitting the economy, people will maybe start to have a little bit more of a bullish outlook there. E-mini S&Ps in slightly negative territory, as you can see here, but again, pretty much unchanged on the day. And what I was talking about, an inside day. We just now, with this probably down move, brought that value area low outside of that inside day that I was talking about. But you can see this whole week has just really been a tight range, and that it makes it very difficult to put on new trades when that happens. So without further ado, let's talk about the trades that I've actually just taken off. And with that being said, IBM is one of those that I took off my covered calls. I talked about this yesterday, about this entire trade, and we can just kind of break this down really quickly. With that being said, during the whole financial crisis, you guys remember I got put some stocks, or not the financial crisis, the old pandemic. The pandemic, I got put some stock here. I'll try and put this somewhere where it's not so obtrusive. I got put the stock at 120 back here when market really started selling off. So I got long. I was long IBM. All right. So right now, let's just say we're long IBM at 120 from the crisis there. Try and draw that line to get it. All right. So anyway, I had collected $1 for those puts I had sold. That being said, my break even on that, I'm just going to write it over here for, I'll just write my collection, right? Hopefully that comes in on the screen. It looks like it's a little bit too high. Here, I'll write it a little bit lower, collection. Collection, all right? So forget about that right there. So I collected $1 for those. I got to keep that because I got put the stock. Anytime you collect a credit on selling options, you get to keep that credit. Yes, I did have to buy this stock at 120, but again, the end of the day, it doesn't matter. I still got to keep that collection of credit. My break even is lowered. It's at 119. We started seeing this market rebound and get back into this channel here, and I decided to go in and sell some puts in there to do a little bit of dollar cost averaging in there. And I sold the, what was it, the November, I got to check my notes here. And then I sold the November 105 puts for $1. So another collection of credit. The next day, and this was on 11/20, I believe, 11/20, 11/21. I think I sold those, it was 11/21. And then on the next day, 11/22, I basically sold the 120 puts in there for $1 as well. Now, my total collection now is $3, right? So I've collected $3 total on that. And then I was able to cover both of those for a nice profit. I covered these for 11 cents debit, and then these for a 7-cent debit. All right. So getting out of those, I have to subtract that out of my total P&L on this trade, and which we'll do here. And then most recently, I did the January, sold the January 135 calls, which is what we've been talking about here. I just wanted to make sure I didn't miss anything. 135 calls in there for another 50 cents. Correct. Another 50 cents. I bought those back today for 10 cents. So all in all, you can see with that original credit there, I collected a total of $3.50, right? We've got to subtract all of this out of that, which is 28 cents, right? So take out that 28 cent. So all in all, $3.22 so far, lowering my overall cost basis on this trade that I have. Obviously, with it trading up around 125, I'm long at 120, right? Because my P&L is really still showing 120. All of these collections kind of go to the back window. But in this entire time, you can see that I've collected another $3.22. You know, that's aside from the dividend that they're paying out as well. So you can, like I said, with this all, you can say that you're lowering your overall cost basis. You can look at it as extra dividends coming into your account. But I like to look at it as I'm staying mechanical, lowering my overall cost basis, increasing that width of that spread. So, you know, I have done that with this trade by $3.22. And like I said, in the back in the day, this was the trade that I loved to do around IBM, was selling calls, selling puts, dollar cost, lowering my overall cost basis on it. Go as soon as they got called away, I'd start selling some puts. I haven't had it called away from me yet. So with this, I was selling those 105 puts just to do a little bit of dollar cost averaging, but it ultimately just lowered my overall cost basis on it. So a nice win on that trade. I'm out of IBM. EA Sports, I pulled the ripcord on it this morning. We ripped above this triangle that we have set up here. And I put in that triangle. As soon as we broke above right there, I decided to pull the ripcord on this trade. It does not look like we are going to sell off in here, despite the fact that I thought we were going to see some pain for EA Sports based on the fact that these consoles haven't gotten distributed. And most people aren't even going to get them until, obviously, now next year. And that's going to hurt EA Sports earnings when they release here. So I was kind of expecting people to start pricing that in. They haven't, as much as I would like to see anyway. So that being said, I decided to get out of this trade. And if you guys remember, I did the March. In March, I sold the 130 puts in there for, bought the March 130 puts in there for $5.65. So I bought the March 130 puts for $5.65. I did this really small, you guys. And then I was able to get out of those for a nice little tiny loss today. And I bought them back, sold them back for a loss because I sold them back for less than what I bought them for, right? So sold them out for $3.75. So that was a loss of $1.90 or something like that. So that was a loser. Not really loving it, but that's what we do. We try and play it out. I expected that market to start to roll over, and it didn't do that. And that's what happens. But pulled the ripcord as soon as we started breaking out of that. PENN is something that I wanted to talk about. I said, if you saw this market break below this, it was going to be a confirmation, but we're kind of getting this other little doji right now. If it's to end up like this, it's still looking like we're forming a bottom here in PENN. I told you guys I'm in this for the longer haul, so I'm not going to necessarily try and cover this right now, but a bit of a move higher. I'm going to look to sell some calls against it again, and if we move a little bit lower, I might go in there and sell some puts for some dollar cost averaging. But at this point in time, I want to talk about PENN as being the winner in the portfolio for the best P&L of the year in all of the things that I've done. PENN knocks it out of the park, obviously, because I bought it at literally the day that it hit its low, and I have been continuously lowering my dollar. Why am I dollar cost averaging so much today? I've lowered my cost basis on this trade quite dramatically, and that's what I plan to do going forward. I'm going to hold on to PENN, but talking about winners and losers in the portfolio, PENN being the standout winner in the portfolio this year, and the standout loser is me trying to fade the pandemic with some of the airlines. And I had done a combo in here where I had sold puts, bought calls, and that obviously didn't work out. Market slammed in my face. I never got put this stock, but I covered the trade for quite a dramatic loss. One of the biggest losers. It is the biggest loser of the year by far in my portfolio. But that being said, today is the last day of the year. We can kind of look at our P&L, shape up how we traded. And for me, one thing I always used to say when we were on the floor, whenever there is blood in the water, that's when traders make money. That's the time to go fishing. And it was no different this year than any other year. When there is, angst in the world, that seems like that's when traders do the best. So if you have been trading this year, and even if it was your first year, if you came out unscathed or even had, a banner year like I did, then that is quintessential of being a good trader. Yes, when everybody is making money and the market only goes up, that doesn't mean you are a good trader. But when there is markets as volatile as what we've seen, and you've traded through it and gotten through it unscathed and or crushed it, then that is very significant in being a good trader, to be honest with you. So that being said, done patting myself on the back. I hope that you guys are patting myself on the back. I hope that you guys are able to kind of do the same and did very well this year following all of this stuff that we've tried to teach you guys throughout this time, because really those guidelines for trading options that we've come up with have been spot on for traders during this pandemic, and hopefully you've been following along as well. All right, so that's all I've got for you guys. Last thing, I always say it's all I've got for you guys, but I always forget that there is something very important we do need to talk about, and that is our disclaimer. So please take a moment to go over this, as we are an educational company. I'm not trying to get you guys to limbing off the cliff with me. What I'm trying to do is teach you guys how to trade options. And that ultimately is what I want you to take away from this. Not my directional assumptions, what I come up with, and my beliefs as what the market is going to do. What I want you guys to do is have your own directional assumptions, but you do need to follow these guidelines that I've set out for you in trading options, because those will increase your probabilities of success going forward. All right. So that's all I got for you guys. I hope you have a wonderful weekend and an extended holiday here. Stay safe tonight. Hope to see you next year. Hindsight being 2020. Let's look forward to 2021. All right. So if you can't take that on a miss, on the last day, take that.